Hello and good day, ladies and gentlemen. You're with Martin Penef, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European Session Market Outlook. Starting as usual with the North American markets. Yesterday, the Dow Jones and the Nasdaq were pretty much moving sideways. No big movements there. The Dixie Dollar Index is down to 94.34 from 94.60. Yesterday, initial jobless claims, 3,000 better than the expectations. The Philadelphia Fed Manufacturing Survey as expected at 2 points. And also CB leading indicator month on month, 0.1% better than the expectations at 0.4. Fed Williams had a speech yesterday, quite hawkish. Much of what he said was in line with Mr. Dudley and Mr. Bullard's speeches this week. In what looks like an attempt to give the US dollar a support as it slipped and closed below a 2-year average today and struggles to find support. September rate hike should definitely be in play. He's also okay with uncertainty over exact timing and not in a hurry to hike, but can't let the economy overheat. Today, we will mainly focus more on the loonie, on the Canadian dollar, as we are waiting on the inflation reports and also the retail sales reports in Canada. European markets yesterday, the DAX 30 and the CAC 40 are still in continuing downtrend for the week, as it's over 1,000 points for both indexes this week, quite a severe drop. We saw positive net flow of goods, services and interest payments in and out from the European zone coming from the current account reports yesterday. And as expected by the experts, inflation reports from the CPI data. The Ecb Meeting Minutes yesterday, the minutes of the first Ecb meeting after the Brexit referendum, revealed that the central bank officials were in wait-and-see mode during the July meeting. Specifically, the ECB officials deemed it too early to assess with any certainty the possible implications of these headwinds for the euro area economy and ultimately for the inflation outlooks which they're chasing. As such, it was widely felt among members that it was premature to discuss any possible monetary policy reaction to the Brexit referendum. ECB officials were open to further easing if needed, though. In addition, the central bank officials also discussed the banking crisis, particularly in Italy, and that European policymakers must put in place adequate policy action and measures in order to address weak profitability and also the remaining structural weaknesses in the euro area banking sector. Overall, nothing really new that we haven't heard before during the July 21st ECB statement and presser, which is probably why the euro didn't really react that much. Next week, for the European area, we will see the market PMI reports, Germany's GDP, IFO business climate reports, current assessment as well, and the expectations. Along with the consumer confidence survey. These are all for Europe's largest economy, Germany. On Wednesday, the industrial production report is due from Switzerland. And that would be pretty much the most important events in the agenda. Moving to the UK markets, the FTSE 100 was 11 points down. It closed at 6,875 points yesterday. Despite the Brexit clouds that are gathering over the UK political and economic future, the unexpectedly sunny summer in the UK resulted in unexpectedly positive retail sales. Very positive reports came out yesterday. The data from the retail sector showed a surprising sharp jump, which drove the sterling to a 2-week high versus the dollar. This week has been quite favorable towards the pound after the data followed good inflation readings and lowering unemployment. The sterling strengthened with almost 1% versus the dollar and 0.6% versus the euro currency. In numbers, yesterday, the cable did 120 pips up movement yesterday from almost 200 pips range versus the yen, 150 pips up yesterday, 210 pips range, pretty much going sideways today, cable as well. Versus the Aussie, 120 pips out of 260 range, again going sideways, versus the Kiwi, 130 pips up from 235 pips range, pretty much going sideways today as well. The public sector net borrowing is the report from the UK scheduled for today. Moving to the Asian markets, the Nikkei 225 went down 60 points yesterday. All industry activity beat estimates with 0.1% and rose with 2% versus previously -1 at 1%. In currency pairs movement, the Canadian dollar versus the yen, 60 points up, 75 against the euro, against the Swiss franc, 100 up, and 33 points versus the Chinese currency. No events in the economic agenda for the yen today. Next week, the reports which might catalyst the trend would be the inflation data reports coming out in the middle of the week in Japan. Commodity sector, the S&P 500 index had a range of 8 points. Currently, the quote is nearing 2,180. EIA natural gas storage change yesterday. The storage in the US rose by 22 billion British thermal units in the weekend, August 12th, while an increase of 27 billion was expected. Natural gas is trading at 2.64 cents at the moment, range of almost 10 cents yesterday. Gold prices held on to overnight gains in North American trade yesterday after a pair of US economic reports did little to alter the expectations that the Fed interest rate would stay lower for a longer period of time. Gold had a range of $10 yesterday, down to $1,348, where the price is pretty much right now. The crude oil has now closed higher in 6 consecutive sessions, jumping by more than 15% over the span. The latest rally in crude prices was triggered by comments from former OPEC head Mr. Khalil on the possibility of production freeze by participants at the Energy Forum in Algeria. This is going to be in late September. WTI had $1.60 range up to 48.55 where the price is right now. Today, we are waiting for the Baker Hughes oil rig count. That would be pretty much all from me from today. Thank you very much for your attention. I wish you a successful trading day. Cheers. Bye-bye.